You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That tunage means it's time for us to come at you once again here for a little show we like to call The Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If we sound a little bit different, it's because we're still coming to you from our southern studio here, the roving southern studio here for midsummer. We like to do this every now and again this time of year to mix things up for us as well as for you. Looks like the weather is a little dicey here, but it should be holding out, so we should be able to make a full show here. You never know down here. The storm clouds gather at a moment's notice. Of course, we like to talk all things options here, your bi-weekly source for all things options related. You can get it pretty much however you like, the website, our mobile app. You can go to the Pocket Cast or your iTunes. You can grab that RSS feed and paste it into your reader of choice, or you can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixler. However you get it, hit us up. Questions, comments, insights, pearls of wisdom. We do enjoy hearing from you guys, and we got a ton of feedback from you guys and all sorts of good stuff. We'll get to that in a little bit, but first, let me introduce my cohorts, my partners in options crime. Going to spin the all-star wheel, and who do we land on first? We come to the man who's busy scarfing down his finishing his Skippy's Gyros and lemonade before the show starts. Of course, I'm talking about Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Great to be here as always, and I hope you're enjoying the southern state.
I am. Not quite as sunny here as you might think, but c'est la vie. It is kind of funny that I came all the way to the south and I dodged the big heat wave in Chicago. That's not usually how that works, but I'll take it. I'll take whatever I can get. And we'll also get someone who's a little bit farther north and a little bit farther east. Let's see if he too is blistering under a heat wave, or perhaps, who knows, maybe it's 12 degrees up there. You never know when you go to the hinterlands of Maine to seek out the Rock Lobster himself. Mr. Rock Lobster, how go things in the land of Maine, sir?
It is 75 degrees, sunny, balmy, near perfection, and the water is calling me. I think some fishing will be had at approximately 5:02 p.m. Eastern Time.
There you go, 5:02 p.m. Eastern fishing. So listeners, if you're out there in the hinterlands of Maine, you want to do a little fishing, maybe a little crabbing, maybe a little just rolling around in the mud, the Rock Lobster likes to do it. Just walk down the coast of Maine until you find him. He's that one-eyed guy. He's that one-eyed guy who's always searching for options and making Maine the number one option state in the country, according to Google. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck was traded, what was going on, what was catching our eye in today's activity. A lot of red on the old screen today. The continued saber rattling over all things trade war. Continue leaning on a lot of the big names with macro exposure here. You know, it seems like we were past it for a little bit, then it's back. It's one of these things that comes and goes with fury whenever it does. Most of the markets off. The S&P off about 0.6%. Actually, the laggard on the day, the Dow and the tech-heavy NASDAQ, outpacing it to the downside off about 0.8%. All of this means VIX Tech taking itself back up, going up nearly two handles to end the session here, right around 1470, up for all you percent of percent fans, yes, I'm going to say it, up nearly 15% on the day. Let's see where we topped out on the day. Topped out over the 15 handle, 15.18 out there in the VIX cash. So I don't know. I'm not liking how that's looking for my prognostication on vol views tomorrow, but we still got a day. We still got a little bit less than 24 hours for things to settle right back down. You know, we were cooking. We were looking nice. Everything was eroding nicely. And then we had to go rattle in some more sabers. So say la vie. That's what happens when you talk trade wars. Market gets spooked and things get a little bit juicier on the vol side. Let's spin the wheel. Let's go up to Maine. Let's go, since we're talking all things VIS. Mr. Rock Lobster, what zone are we in now? Have we moved out of zone 1? Or are we still in zone 1? And then also, what else caught your eye in today's activity, sir?
Well, remember last week we were discussing, although I'm still trying to remember last week because our Pro Trader Summit is so darn crazy, where we
I think the adjective
like
you're looking for is boozy. It's a very boozy summit.
We were just bobbling around like zone 1, right? Zone 1, trying to stay in zone 1. This has not been a zone 1 year by any stretch of the imagination, where I think more of the Trump presidency, I think, is more of a zone 2 presidency. Last year, I think, was just they teased us. And I even last week we were looking at the very kind of flattish future curve, and then things got vol softened again, and then trade war back again because surprise, another 50 billion in tariffs. I think that was the surprise on maybe Thursday or something last week. We are solidly in zone 2. The curve is flattening, like the VIX, like kind of the VIX VXX relationship that is compressing a little bit because I have some like kind of VIX VXX ARBs on, long VIX and long VXX puts. So that is taking a little bit of pipe right now as VIX cash is moving a lot, but the futures aren't moving enough to really pull the VIX options up. So it's kind of this, it's a little bit funky, but it's like just think of it like the rubber band is being pulled and pulled and pulled, and we're just looking for like a real explosion in vol, or it's all just a bunch of poop because the VIX futures are really they're going up. They're just not going up as fast as really the VIX cashes. That contango value wasn't maintained from Monday. And that's the market absorbing those futures doing what they do. They're insurance contracts, and they're absorbing the move until they have a real reason to sort of break free. So they're not, whatever the move is today, the reason is, and I never know what exactly moves things. All I know is the market is still somewhat absorbing it. But VIX cash moved much more, I think, than was warranted by, kind of a slacky sell-off, and I think one of our clients was just skew. It just blew up today. Blew up in a couple of the near-term cycles, and that will translate to VIX. So big buyers of the downside options, and I don't know why. And part of me is like, I think people, instead of just selling now and dumping their stocks, they're like, well, instead of doing that, we're going to buy puts and buy underlying, right? They're a little savvier now, and they're looking for a potential explosion. So to be honest, again, I never know where things are going to go because I wish I did, or I'd own several islands by now. But it just still, again, kind of coiling and poised for, I'm going to say a 50 handle move one way or the other by maybe tomorrow or Monday or Tuesday, not quite sure. But that's really, at least I think that's what the options, I'm sitting in the SPX pit or in an equity pit, and I'm thinking, we're moving one way or the other, and it's going to be fairly good size move. So I'm thinking at least 1.5% or more within the next 2 or 3 days. That's what the curve is telling me. If that happens, I'm going to do phenomenally well, and I'll be very satisfied. So you will not hear any complaining from the Rock Lobster. Maybe I'll get another fishing pole.
You can always find something to complain about, sir. I don't worry about that with you. So you're calling for a 50 handle move? You said by tomorrow or the next couple of sessions?
I want to say within 3 days, 40 to 50. Yep.
That's surprisingly outlandish and out there for you. But I'm kind of with you. I was watching what was unfolding a little bit today, particularly in the cash, and I'm looking at the futures and everything else that's going on. I'm like, this seems a bit much.
It seems a lot much, right?
I was like, maybe, I've been running around here in the Southern studio. I haven't been glued to the screens. I was like, maybe there's another shoe dropping that I missed in my cursory analysis, but it does seem a wee bit extreme. So yeah, I'm probably going to lean on the back down. That's what my vol views prediction certainly is. So maybe I'll stand behind it. But you know what it is, Mr. Rocklops? You could have all seen this coming. We knew VIX was going to pop. You know how we knew that? Because our buddy's back, 50 Cent's back. When he's scooping up calls, VIX is going. VIX is not sitting at 12 when 50 Cent is scooping up 50,000 at a clip. You know we're moving. You know we're popping. He's in tune with the flow, sir. He's in tune with the markets. When he buys, where he goes, the market follows. And 50 Cent was telling us, and it was all out there for all of us to know. Dick. Uncle Mike, why don't you tell us what's catching your day here, sir, while I figure out what's going on with the chat.
For sure. So today was it's I like the way that Andrew described the sell-off today, in that the markets went down, but it wasn't necessarily a huge move to the downside. It looked like it was going to be at the beginning of the day today. Ultimately, we're down, at least in the S&P, roughly 0.6%. So down day, no doubt about it. But we definitely looked like, at least for the first hour of the day, like it was going to go a heck of a lot lower with what was happening in the marketplace today. From the sector standpoint, the only one that really went down, probably the greatest amount, was XLE, down nearly 2%, the energy sector. Other than that, everything was pretty close in terms of the downside movement as to what's been happening today. My beloved Apple is at around the 185 level, so it was down $1 on the day. And then the unique thing about this is that if we're to say that there's a lot of buyers of vol coming out today, just the only thing I would add to what a lot of times in the marketplace, let's say that the S&P is down 1%, theoretically the VIX should be up 10%. That's kind of like a 10-to-1 movement a lot of times. And today, the S&P was down 0.6%. So in theory, the VIX should be up 6%, but the VIX is up 14%, 14.5% almost on the day. So it's definitely a pretty big move from the standpoint of volatilities. 50-point move in the next couple days. I can't say I'd be shocked by it, but I'll still give it my 50% guarantee that it could happen.
There you go, Uncle Mike. You're breaking up a little bit there towards the end, sir. So do me a favor and check all your stuff. You guys in the chat should be hearing everything now. I'm not sure why all that's what happens when we're traveling here in the Southern studio. Things sometimes get reset, and here we are gabbing away, talking, and nobody can hear us. Hopefully, you guys can hear us all now, and it should be good. At the end of the day, if you guys can't hear us, then what's the fun? I know the podcast folks can listen to us and hear us, and they can have fun. We love you guys, but we want to make sure all you crazies out there can hear us too. All right, so that should be working here, throwing me off my game, doing some last minute in the middle of the show, tech support, but it seems to be working out here really quick. No one else is working out. We talked about it before. It has been a good year for options volume. We talked about the OCC numbers. Now, folks over there at Tab coming out with their own analysis. They do a lot of this breakdown stuff here in terms of what's going on by volume, and they do it by exchange. So far, through the end of May, year to date, it is a rock'em sock'em year. We're seeing, the volume, of course, spiked because of February 5th and 6th. So that was really with the genesis of a lot of the gains in Q1. We came off that a bit, but still, we're just looking, if this stays anywhere near these levels, it's going to be a record year for options volume. Yet again, looking at the breakdown, too, they break it down by exchange. Mr. Rock Lobster, I figure you look at the notes, you may know, but I'm curious if you had to guess right now, given the fact that we're in kind of a macro-dominated environment, VIX has been popping this year and moving a bit. Indices have been moving a bit this year. If you had to guess in that kind of environment, which exchange do you think is dominating the flow so far this year, sir? This would be the portion of the show where you unmute, sir.
Okay, I actually hit the unmute button.
There you go. There you go. All sorts of tech problems on the show today.
Oh, my God. The SBO is kicking everybody's butt. That's what I'm guessing. Everybody's butt.
Yeah, you don't need to look at the notes to see that one. Yeah,
Nope.
SBO is Rock'em Sock'em Robots leader this year. No one's knocking their head off in that game. They're knocking everybody else's head off. 522 million contracts through the end of May. That's year to date, listeners. Last year at this time they had about 458 million. So a decent chunk more than this time last year. Also, so of course that's still an impressive number for last year. Even this time last year, VIX was even more anemic than it is now. Number 2 behind them is Philly. Actually, good old OMX PhilX doing about 304 million. We all know Philly puts up a lot of, shall we say, dubious trades in the form of dividend trades, and a lot of that is going away now. OCC has made some changes to make that volume a little bit harder to put up, but still, they're putting up a lot of that stuff. Still goes up in Philly land. They're the last people to get rid of their fee caps. So take those numbers out of Philly with a bit of a grain of salt. Then we got an actual tie, which is weird, between NASDAQ, big mothership NASDAQ, and NYSE ARCA, both doing 190 million, and also BATS also at 119 million, which is 190 million, which is kind of weird that all three exchanges would have a three-way tie. I don't think I've ever seen that before. Makes me kind of wonder about these numbers. I'm going to have to dig into them a little bit. But there you go, some breakdowns. And we got Amex coming in, 157 million. ISE used to be number 2, right behind the SBO now, at about 160 million. So kind of in there, that 4th or 5th place range. And then the rest kind of all following off from there. Interesting stuff to keep an eye on as we keep an eye on some what else is trading. In the weirder side of the space, it is time for the Odd Block.
The Odd Block.
That's a little bit of a blast for the past for you listeners. That's the old drop for Odd Block. That's what we do when we're traveling here. We play some different drops here. Mix it up for you a little bit. This is, of course, the Odd Block, the portion of the show. We break down what was weird, what was interesting coming across our collective tapes out there today. We kick things off, as we like to do a lot, out here in Tesla land. Tesla just taking a drubbing. They've been rally homo. They're up about 70-odd handles in the last week or two. Giving some of that back today, giving about 15 handles or about 4% back, closing shy of the 350 level again, 347.5. I think there was some news over the weekend or over news recently about sabotage. A lot of just drama. If you want to just chalk it up under one word, it is drama. There's never a shortage of drama at Tesla, and that was indeed the case yet again today. When days like this, when drama is popping, when the downside is rearing its ugly head, when the screen is red, that's when we like to look a little bit farther afield here, listeners, to see what's going on with our mystery puts. These are always good days for the mystery puts, and today is no exception. The Jan 2019 50 puts lighting it up to the tune of 1,250, hitting the tape. A cool 12.50 lighting it up. These things back up to about $1. They were trading around, I think, 75 cents not too long ago. So, again, we talked about it before, kind of the Vega effect, for lack of a better word, kicking into some of these puts that have a pretty nominal delta, but still tend to move around quite a bit. That's what happens when you get on some of these extreme ends of the skew. Things get a little crazy, a little weird. Things have gone from $3, from 30 cents to $3, now to around $1. So it's been a tumultuous year for these mystery puts. The 20 puts also doing about 350. There's things trading right around 20 cents right now. Worth noting, 57,000 open on the 50 puts, 10,000 and change, 10,600 open on the 20 puts. Let's go out. Speaking of 20, let's go out to 2020, see what's cooking out there. 50 puts a little bit lighter out there today, only 118 hitting the tape, but still nearly 20,000 open out there now. So these 50 puts in Jan 2020 have been inexorably growing and up to almost 20,000 open interest. So whichever house is putting up these CDSs and hedging them with these things has moved its action out to 2020 as well and is doing a lot of paper. Worth noting, almost 11,000 open on the Jan 2020 20 puts as well. 82 of those going up today as well. So long-term puts. I know that will cheer you, Mr. Rock Lobster, to see the Tesla off 4%. And to see the puts were actually trading is up. Does that bring a smile to your face, even though you're not really slinging them in good old Carmen Line land, sir?
As much as I would like to swing them in Carmen Line land, we are not. It is a. I still think it is the there's hedging, mass hedging going on. Just shows you how much that they could charge for CDS. They could buy those puts and basically pay whatever they want for them. And I think Tesla is still, again, a volatile story. And somebody is getting squeezed. I mean, it got close to an all-time high again this week. So it's a hold on to your hat story. And it's not going to – it's amazing how resilient the stock is. And, I think there's just a lot of green people that believe in the story. And every time it dumps, they just jump in and buy it. So we'll see. We'll see how long. Elon Musk can keep it up. But hey, he's going to build a metro train from the O'Hare to downtown. Like you need. They already have an L train, right? So Chicago, which has no money, is going to build another train.
There's a blue line that goes right there. It takes like 48 minutes. Not that bad of a ride. Instead, you're going to dig up. There's no houses between O'Hare and the Loop, right? So there's nothing people can get upset about there and sue you every 50 yards all the way from O'Hare. That could not get tied up in litigation for decades, and every alderman's going to have his hand out and everybody else. I look forward to seeing that happen. If he can cut through the bureaucracy that is Chicago, I would be moderately impressed. To say the least. Speaking of impressed, I don't know if impressed is the right word for this trade, but we do have some more info on it. We talked about it earlier in the week. This trade last time, Mr. Rock Lobster. Remember the Rent-A-Center? Remember there was a big deal. It looks like a venture firm was coming in. They're going to announce they're picking up Rent-A-Center for $15 a share, which is kind of this little stealthy business people forget about, but seems to be doing all right. And this company is certainly liking it. Vintage Capital. The deal was expected to close by the end of the year. We saw at the time, it looked like a funky 1x2, and we couldn't really make sense out of it. We saw it was like the SEP 1113 1x2. Looked like paper was selling 1 to buy 2, selling the 3500s for 370, buying the selling the 11s for 3500 times for 370, buying the 13 7,000 times for $180. And it was an interesting trade. It was kind of a weird way to maybe play this deal, even though it was kind of odd. We kind of discussed it there, and if it was the other way, we weren't sure. Some of these executions were mid-market. If it was the other way, then it was even weirder. Either way, we wanted to see when the OI numbers came out to see exactly what the heck was going on. Looks like, Mr. Rock Lobster, that at least on the 13 strike, this was pretty much a closing trade at the time. There were, let's see, the OI on this one, if my system wants to play, there we go. The OI on the day was about 8,700. We saw 7,500 go up on our last show day, and the next day the OI was about 2,700. So we saw a lot of this was closing on the upside, Mr. Rock Lobster, which may be not surprising given the fact that we know this deal is going on. The stock moved a penny today. That's kind of what you expect in these deals. They rally near the price, and they kind of sit there like glue unless something really comes undone with the deal. So the 13's closing. The 11's a little bit more of a mixed bag. They were only partially closing. The OI we talked about 3,500 trading on the day, and then it's 3,500 more come in, so it was kind of weird. It seemed like maybe someone could have been coming in and doing the spread 1-to-1, but coming in 2 hours later on the second leg, all of it was kind of weird. And then we looked at the OI here coming in. They went from about 9,000 down to about 5,000. So it's partially closing on that day after about 7,000 or so traded. So again, a lot of back and forth on the 11 strike, as maybe could be expected in a big deal day like this. So I don't know. A couple of days hindsight, Mr. Rock Lobster, I still don't know if we know that much more about this spread. It was kind of a weird one. They were closing on the upside. That much is certain. The 11s were kind of back and forth and churny, and I don't think they were coming in. Certainly, they weren't coming in to do a naked, sell one, buy two. They were closing out maybe some shorts on the 13s. But then if you're going to do that, why would you reposition on the 11s, especially when the deal price is 15? I don't know. Mr. Rock Lobster, any more? Have you done any more digging into this one? A bit of a weird one.
It was kind of confusing then, and I'm just going to say it's a little confusing now. Possibly it's some sort of weird tax thing, which I don't even know how that could be. So listen, when I say tax thing, I would say I'm already in a state of confusion as to why you would want to trade it. So
yeah, tax thing is kind of shorthand for we don't know. We don't know what the hell's going on with this trade. When we say it could be a tax thing, that's when we're kind of just like, that could be a tax thing. Could be some weird, with the Dominican and the tax law there, and you could arbit. Sure, tax thing. Why not?
We are abdicating all responsibility for this
CPAs have at it on that one. A weird one. We could probably parse it for days. We want to move on to some other names, though, including some actual popular ones. It's been a while since we talked about SBUX here on the show, Mr. Rock Lobster. Good old SBUX. Used to be the other name that traded out in the IBM pit in the SIBO. So you went out there. IBM used to be the big equity, and they were the big pit out there. And then, of course, on the side there was also good old SBUX. So I spent some time slinging some SBUX back when I was still clerking, still learning the ropes out there, slinging a lot of SBUX. Closing today, $50.62. Of course, I'm talking about Starbucks listeners off $1.60 or 3%. They've announced that they're kind of shutting down some locations. It's been the joke forever that Starbucks is pretty much everywhere. You walk down Michigan Ave in Chicago, you're going to see Starbucks literally across the street from each other. There are about, I think, 6 to 8 within a couple blocks of our studio there in downtown Chicago. So I think it's fair to say that they've saturated the market for mid to high-end coffee. Interesting stuff. Nonetheless here going on in SBUX land, off 3%. And this is the name that does decent papers. You might expect about 30,000 contracts a day. Today doing $1.40, about 1-to-1 though. Calls over puts pretty even, including kind of what we saw in our trade out here, Mr. Rock Lobster. It was out in AUG. Looked like the AUG 50, 55. You kind of call it what you want. You want to call it a strangle. You want to call it a risk reversal. You want to call it a collar. I wouldn't turn my nose up at any of those, Mr. Rock Lobster. It was the AUG 50 double, call it one of those, going up about 4,000 times, done in 2 blocks of 2,000 each. Looks like picking up the puts, or trading the puts, I should say, for $1.62. This is the 2-cent wide market, so went up literally mid-market. So pick them on what you think went up there. And then the calls also splitting the market there as well. So exactly mid-market on both. So it could be that they're coming out and closing these bad boys, or it could be they're just establishing. Worth noting, there is a lot of volume, OI, on both of these strikes. But towards the end of the day, more paper did come in to the tune of a total of about 3,500 of the puts and 8,000 of the calls. So it could be a bit of a bullish risk reversal. Could be closing, not closing on the calls. There's only 4,500 on the calls. So it's opening on the calls, at least part of it. But the puts also net volume-wise is opening, but it could be that initial chunk could have been about, looks like 3,500 and net 2,800 or so on the OI. So a weird paper here. Let's look at the chart here on good old SBUX. It's been a while since we checked in on these bad boys, see what they've been up to in the premium coffee land. A year ago, they were close to where they are right now, actually a little higher. They were about $10 higher, $60. They're trading right around $50 today. They got as high about 62 back in late January, and then they kind of been vacillating around this mid-50 levels until today, one of the last couple of days, when it just dropped off the face of the earth, as Mr. Rock Lobster would like to say. Mr. Rock Lobster, these are pretty tight markets that you'd expect in near-term SBUX options, so it's kind of hard to parse on the execution alone. The OI is sizable, so it could be some closing, some opening. You're looking at this one today. Are you feeling someone collaring some stock? Are you feeling bullish risk reversal to come in this on a near-term sell-off here? What's your pick?
Well, this is one of the classic ones where you make a 2-cent wide market and they put up 8,000 contracts right in the middle.
So, that's why we're not market makers anymore. There's so much money in it.
Oh, okay. I guess we won't be trading that one. This is a pick'em. It has the taste of like buy puts in stock and sell some upside calls, possibly. A possible bounce play. That could be it. Or I'm going to sell some puts and buy the 55 calls for a credit. That's a possible thing. So I don't know why Starbucks is down so much. It's Maine. Who drinks Starbucks coffee in Maine? You just drink the Green Mountain coffee from the gas station. So, but looking at it, it really is. It's a pick'em. It's saying going up spread, trading Amex. It's feeling kind of crossy with stock. So that's what I would say as far as that goes. Not just a tough one, but a stock that's is kind of cratering, and it looks like it's kind of found the bottom a little bit today, but tomorrow will be another day, obviously. Anyway, but it's a lot cheaper than it was a couple days ago. So it looks like they took some of the bloom off this, and maybe just the fact they're closing stores is saying, hey, the growth is kind of we're slowing the growth down, baby. So that and this has got a growth stock multiple. So somebody again wanting either collaring, taking a conservative position, or heck, just going for it. I'm just going to buy some 55 calls and sell the puts against it, which they're looking for an immediate bounce back up, which I guess could happen, but it looks unlikely given the type of sell-off it just had. It looks kind of like it's a dead money type trade from now on.
I would like it if it's a bullish risk reversal. Someone coming in, someone saying, let's do it. Let's dance. It's going to pop. I like myself some premium lattes, and I'm not afraid to put my money where my mouth is here. Is that a joke? Was that a joke even in like the Black Panther movie recently? Like they've been isolated from the world forever. Now they open up the borders, and the first thing they want is a Starbucks. So it's like they expect the Starbucks to open in Wakanda. So yeah, it's reached that level of saturation. So maybe not the worst thing that they shut down a few stores here. Speaking of sell-offs, our final name's having a pretty bad day as well. This is IQIY Inc. Ticker symbol IQ. Closing today, 38.83, off nearly $6, or about 12%. If you're not familiar with this one, this is a Chinese company that's principally engaged in the provision of online entertainment services. They do video. They're a video platform through China. So they may be kind of a bit of a Chinese YouTube, for lack of a better analogy there. And what we saw out there today, all this back and forth with China, clearly not giving some rub to these guys selling off again today. And what we saw out here today looked like, at least starting off today, a bit of a sizable put spread. Looks like paper was selling in at least the initial kind. It was a July 40-35 put spread going up 3,000 times to start the day, doing it for about $2.50. Paper selling looks like the 40s and probably buying the 35 puts. Again, 3,000 times to start in the main blocks. As the day went on, we saw more paper going up to the tune of 7,000 on the 40 puts and nearly 9,000 on the 35 puts. Worth noting, there's decent OI on both strikes, about 12,000 on the 40 puts and 6,700 on the 35. So it could be a bit of a roll to Mr. Rock Lobster. These 40 puts coming in the money now, rolling them on down to a, shall we say, less in the money strike. Let me look here to see. We had a lot of this put started going up back not that long ago. Back on the 14th, we saw about 4,400 of these 40 puts in July trading, and then we saw 5,000 more trading on the 15th. We saw 7,000 more trading on the 18th. So this has been the trade du jour. 5,000 more trading on the 19th. OI got up to 11,000. 3,500 more trading on the 20th. And then today, of course, 7,300. So maybe someone who's been opening all this time, maybe deciding when the stock was 42, 43, all up in that range, maybe deciding to take some of that off. Could be some well-timed paper, keeping the party alive as well. Usually when we see that, though, Mr. Rock Lobster, see people doing it on a bit of a ratio, maybe doing a 1-by-2 because they got house money and they want to put it to work. Maybe our friend just doing it 1-to-1. Does it feel that way to you, Mr. Rock Lobster? Well, before we even get to that, let's look at a chart here really quick. This one's a more recent edition chart, only going back to March when it was trading a whopping $18. So this thing's been off to the races. This thing, shall we say, has had a decent quarter. That's all it needed to pretty much double, more than double. And now, so our friend here, if he is indeed selling these puts, Mr. Rock Lobster, could be playing with some fire. There is some room on the downside. Would you concur?
I think the way the pricing looked like to me, it's almost like somebody was buying these puts the whole time, like buying as it goes up, buying it as it goes up, buying as it goes up. And it has not been a road to riches, at least for right now. And it looks like they finally hit a put that made money, and they could be now rolling it down, taking money off the table, and then trying to, stretching their triple into a home run. At least from the open interest, that's what it looks like. And then we'll see what happens. Obviously, you put China and YouTube together, and you think, $50 billion, $100 billion. So, but the stock does look like it's got a little bit ahead of itself on the rally, and and somebody's just kind of taking and rolling this paper off. Everything traded kind of near the bid, which just it feels a little bit more like somebody's just trying to sell the spread. So, but there is some size Ola open interest on the 35 strike now. You will know tomorrow, but there's a ton of interest on the 30 strike as well. So it feels like somebody was kind of trying to make that work. There's also a lot of reversal conversion action in this, because you see there's a lot of open interest on the 40 and 45 strike, which generally means somebody's trying to get some short stock or putting on some kind of a position like that. And I'm just looking at that as it closes 38. So it looks like it's a little hard to borrowy, a little squeezy. So we could see more of that action, but it just feels like somebody's taking their dollars and rolling this particular put strike. So
it's like someone's
taking the money.
Someone's been piling into puts and it worked out. Hey, piling into puts. Go figure on a frothy Chinese name. It looks like it worked out on this one. Speaking of things working out, it works out that we got some time for a little bit of the old strategery, because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
I tell you, sir, this roving studio, not as easy as it looks. So many buttons and switches and dials. It's crazy. It's crazy town down here. Well, it's a crazy town. Thursday on this show is Crazy Town. That's when Uncle Mike gets to dispense some options, wit, and or wisdom. Uncle Mike, I know we usually do a poll for you, but I got my little birdies. They follow me to Florida. They like the weather down here. Go figure. And they've been pecking in my ear all day about something about, you were a degenerate long premium guy, then today you just went full on dark side. Is that the case?
Those birdies are something else, Mark. I mean, it's crazy how those birds work. Did you buy them a ticket on the plane, or did you make them fly all the way down?
I bought them tickets to Disney. They can come to Disney with me later, so they're excited about that.
Oh, very nice, very nice. That's good. Make sure you give them some of the good bird seed today too. But yeah. So after talking with the birdies today and kind of going through what I had done today, today was a unique day, kind of like what I was talking about in the strategy block, or in the trading block, in that we had a down day in the marketplace today, but vol went up more than it theoretically should have in the norm. Now, like I had mentioned in the trading block, typically if the S&P is up 1%, the VIX would be down 10% and vice versa. It's usually about a 10-to-1 ratio. Sometimes, it's not going to be perfect every time, but that's kind of a general rule with which a lot of people, myself included, typically tend to look for. But today was unique in that the S&P was down roughly 0.6%, and the VIX was up 14%. Now, if the VIX would have been up 7% or 8%, I wouldn't think it would be that big of a deal. But 14% over double the typical area, that is something to take a look at. Now, with that being said, I am still bullish on this market, but managing risk comes before any sentiment with which I'll ever have for as long as I live. So as I always say, I'm long-term bullish, short-term cautious. And so today, what we were able to do, I was in a diagonal spread today, going into today, closed out the short call in the morning, and then markets rallied, and I was staying in the long call. But then after looking, what I ended up doing as the markets were going down, the long call was losing, but it wasn't getting killed just because volatility was going higher. Vega was by no means beating Delta, but Vega was actually kind of holding its own with it, so the long call really wasn't getting beat up too badly. Now, I had every intention of selling some type of premium by the end of the day, even if this were to happen, but I was not planning on doing what I did. So what I did today was I closed out the long call and got into a put spread. Now, the reason for that is that is twofold. The first reason is that I wanted to manage risk, so I have a little bit of a cushion now between where the market is and where the short strike of the put spread is. So that way, if we do have the 50-point move against me, as Andrew was talking about, then I have a little bit of a cushion and I can manage risk, and it won't be quite as many deltas on the table. They'll still be there, and I still have risk, of course, but I just feel more comfortable with that risk based on the current environment. But the second reason is that let's say that we have this 50-point up move that Andrew says that we might have. Should that be the case, then I'm of the school of thought that volatility will come down. And if we have this 50-point up move, and by this 50-point move, I'm referring to the S&P for those of you that joined us late and didn't hear the trading block. But if we have this move to the upside, I'm of the school of thought that the put spread will go down in value very quickly just because of the fact that volatility will go down very quickly. At that stage, I might readjust to long premium again, but for the time being, I believe I got a pretty good deal on the put spread that I have because I have a lot of cushion on it between where the S&P is right now and where the short strikes are. And I believe that it's the right spot to be for right now. So the moral of the story is that even if you believe you're just trading the markets, you're really trading volatility as well. If you're trading any type of option, the only way that you're not trading volatility is perhaps if you're buying a deep in the money call and it never gets any volatility in it at all, or perhaps you're just holding every option you have until expiration. But aside from that, if you're getting into and getting out of options before expiration, you're trading volatility, and you do need to be mindful as to what's happening in the volatility world. So with that being said, that was that is the strategy block for today, and I will pass it back to Mark and the Birds.
It's good. You kind of got me a little nervous when you're talking about going from long premium to short premium. I said, "Uh-oh, what happened to Uncle Mike? Is he going? Has he fallen to the dark side at last, sir?" But sounds like we're still safe. Is that the case, sir?
Oh, by all means, we are safe.
All right. You know, we're not safe though from listeners. Are your emails? Let's get to them. Your questions, your Twitter comments, everything else. It's time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we break down what the heck you guys are sending us, what questions you guys have on your brains. Got a ton of them. We'll run down our question for you this week. You guys loved your premium buying last week. This week, you want to go dark side. We hear you, so maybe next week we'll give you some dark side opportunities. This week we asked you for some entertainment straddles, because everybody loves buying straddles and entertainment names. We give you some July at the money straddles, so you all have the same frame of reference there, and a bunch of different entertainment-oriented names. So if you had to buy one, gun to your head. Some people are writing in saying, "Are we recommending these straddles?" No, we don't make recommendations. We're not saying any of these are attractive buys per se. We're just saying, hey, if you had to pick one, which name do you think is best poised to move a little bit between now and July? We gave you WWE, which is priced around $7. WYNN, so WYNN Casinos, Resorts, Gaming, $12 July at the money straddle. SeaWorld is right around a $2 at the money straddle in July, and Disney, which has had a lot of headlines of late, right around $5. A lot of you chiming in, like Patrick Snoke, saying, "Just pull the trigger, so I don't have to choose the least worst option." I guess the pain of buying premium in these names is just too much for many of you. That said, Uncle Mike or Mr. Rocklops, you guys have any choices in this one? If you had to buy a straddle, WWE, WYNN, SeaWorld, or Disney? By the way, WWE has more than doubled in the last couple of months. I guess by recent history, that's the one that looks the most set. But then again, it's already had its move, perhaps. So interesting stuff. Anything resonate to either of you guys in these names?
I'm honoring my boyhood heroes, WWE, Hacksaw Jim Duggan, Piper's Pit, Andre the Giant, Randy Macho Man Savage. Oh, yeah. I want to go with WWE on this one just for this purpose, but I've never invested any real money in it ever, so I really can't talk too much, but that's what I'll go with.
You just wanted to say Macho Man, oh yeah, and I know what you were.
Oh, yeah.
Mr. Rock Lobster, do you concur? Mr. Rock Lobster, are you still muted?
Oh, yeah, he is.
Oh, yeah, he is. I was just going to do the exact same thing. You beat me to it. Curse you, sir. All right, he's out.
See, I just wanted to give you guys a chance.
I was too busy snapping into a Slim Jim over here to do my impression.
You know what? I thought SeaWorld. I wasn't going very exciting here. I just picked the cheapest one.
Yeah,
I didn't like any of them, to be honest.
Right now, it's a tie from our audience. 35% saying WYNN, the $12, the richest straddle, just from a pure premium perspective. And then Disney, 34%, $5. Disney could have some chances to move. So tied up in that bid for Fox with Comcast, right? So maybe some opportunities there. Here's an interesting one from Runnin' Roger. I like that handle. He says, "Forgive me for asking." Well, you are forgiven, Runnin' Roger. "But I need some help, and I have done something I didn't mean to." Uh-oh. He says, "I bought Etsy puts at the $40 strike and then wanted to sell to close. But I accidentally sold a put contract, same strike, same expiration date. Do they wash out? At this point, I'm not even worried about the couple of $100 I lost on the spread. I'm worried about selling the put contract. I used Robinhood on this one instead of Thinkorswim, and I can't find a way to sell to close. Some help would be appreciated." Yeah, it's kind of funny. People have been hitting us up about the Robinhood. In fact, they reached out to us. They're doing a big push on options over there. So we're going to have them on the network soon to talk about what it is they're doing in the option space. I know I haven't used it myself. Anecdotally, hearing from a lot of you guys out there who I know a lot of you are on the bleeding edge of what you expect from a broker. I've been surprised at the positive feedback I've heard on the Robinhood experience, which is admittedly still pretty much in beta and missing things that are pretty basic, like sell to close, which is a somewhat important one, but not really. So you don't have to really worry too much, Runnin' Roger. Even a pretty neophyte options broker like Robinhood can pretty much figure out if you have a long put contract and you're selling it, exact same option, strike, everything else, that you meant sell to close. So, I mean, you think about it. Are they going to set you up in your brokerage with a long position and then a corresponding, completely offsetting short position on the exact same contract and map them both out in the P&Ls moving with each other in your brokerage account? That would be madness. So, yeah, I think even if you forget, they put that in there, sell to close, buy to open, so you can kind of indicate what you want. But most of these platforms know if they see it on your books, they're going to close it out. I don't know, Rock Lobster, Uncle Mike, have you ever heard of some sort of horror story where that didn't happen and something crazy happened as a result, maybe?
Well, every time, most brokers that I've worked with, you typically have it won't allow you to be long and short a position at the same time. There's usually some type of something to prevent you from doing it. But because most brokers do have sell to open and sell to close, but except for Interactive Brokers, they just have buy and sell. Or that's the only one that I know of that has that. So ultimately, let's say that you are in two positions at the same time, you're long and you're short, there's really no risk to it that I could see, because let's say it goes to zero, the stock goes to zero, you can exercise your long put against it. And if the stock goes up to infinity, then it really won't be that big of a deal, because you'll be all the options will expire worthless. So I wouldn't fret too much over it. The only area with which I could see something happening would be on expiration Friday. Let's say it's right at the money, and you get assigned on the short, but then you don't exercise your long because it was right at the money, and then over the weekend the stock goes way down, and then you're on the hook for that. That's the only thing that I could see happening. So
that's a nightmare scenario right there. That would be pretty bad. I agree. So yeah, I guess
gotta be prepared for all of it. But that's the only thing that I could think of that could go wrong.
Can you imagine a broker letting you just keep both of those just open? You got both. There you go. I got to imagine maybe a decade or two ago that could have been rudimentary enough to get away with that and could slip through the cracks. But I think most of them now are going to be able to, at the very least, net out their exposure and figure out that they got some offsetting positions here. So yeah, I don't think you really need to worry. What was the name again? Runnin' Roger. I like that handle. Here's I got time for I think one more. Here's a weird one from Knowledge is Power with a little Leet Speak 3 in there. Got some good handles this week. He says, I think I understand most things about calls. Well, good for you. They're tough things to understand. All right.
Well, right there when somebody says that, I'm confident they don't.
Yes. We'll see. We'll see what he's asking.
Not really banging on him.
I'm judging by the rest of this question that may be the case. He says, but I can't figure out, and no one is able to give me an estimate if I have an option in the money, and I want to sell the option as opposed to letting the contract expire and buying the shares. What's my ballpark profit? I've been looking at this option for Twitter if you have to provide an example. Well, this is a bit of a vague one here, Mr. Knowledge is Power. So you want to you have an in-the-money option and you sell it. What's your ballpark profit is what you're asking us. And it's on Twitter. You get to give us that much. You gave us the name. But you didn't tell us which strike, how far in the money. But basically, it's pretty easy to figure out your profit. It's whatever you paid for the option and then whatever you sold the option for. You subtract the two. If you got a nice little positive credit in there, you did all right. If you sold it for less than you bought it for, then it didn't work out too well. That's pretty much the easiest math you could do there. But if you have an option, if you're long it and it's going in the money, it's probably going your way unless you did something crazy. So I would have to guess here that you're doing all right. I can't say you made 38% because I have no idea what your months or strikes or anything. So if you want to write back, Mr. or Mrs. Knowledge is Power, with some more specifics on your trade there in Twitter, that's a lot of people have questions about options and expiring. Mr. Rock, are you getting cold sweats, Mr. Rock Lobster? I know this is kind of where things get a little dicey for you, Mr. Rock Lobster.
I know. As far as I can tell, he's buying an option and then wants to sell it without exercising it.
And it sounds like it went his way, so he should be happy.
And he's just ballpark. How do I know how much money I made?
Yes.
I think that's what he's asking.
Your broker should break that down for you, I would hope. Here's your position. Here's the cost you established it at. Here's your profit and loss. Most brokers will do that today, I would hope. If you buy a call and then you let it go, it'll tell you what you made or lost on that position, I hope. If you have a profit on it, one thing you don't want to do is let it expire, because remember, he said it before, you got that little bit of time decay and time premium built into that option. So if you let it expire and you just get expire for the shares, you lose that time value. So if it is sitting on a profit and you like how it's looking and it's everything else, you don't want to carry it to zero, or at least carry it till that decay goes away.
Just close it.
Close it out, exactly. You're sitting on money, you said it yourself, you're sitting on a profit. Doesn't matter what percentage it is, take it off, live to fight another day. Take that money and, maybe you take a course with the Rock Lobster. Maybe you come to Chicago, you hang out with us, you buy us a nice Gibson steak. Whatever you feel like doing with that money is up to you. Meanwhile, we got to keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is the portion of the show where we tell you what we're keeping an eye on. It's we're in that weird spot again where we got these kind of vague, nebulous, murky macro clouds hanging over everything. So it's kind of hard to really parse a particular thing. I mentioned VIX at the top of the show. I think that's where a lot of eyes are going to be, the VIX futures term structure, if all this keeps up. Mr. Rock Lobster was kind of prognosticating a bit of an extensive move one way or the other. Have you decided against that during the course of the show, Mr. Rock Lobster? Are you staying on your 50 handle move in the next couple of sessions?
I'm staying on the 50 handle move in the next couple of sessions. Something's gonna 2,800 or 2,700, one of the two.
So you're keeping an eye on a potentially big move in the S&P, maybe even by tomorrow.
It's just it was a huge, very squeezy move for volatility in the SPX. Normally, when that happens, either they're buying huge puts against an equity position, or they're just buying some puts. So I'm slightly positioned that way. If it happens, I'll be happy. If I only get a 30 handle move, I'll still be a little happy. I just won't be happy. I'll be happy.
You won't be eating lobster every day. Oh, wait, you already do that now because you live in Maine.
Not at $7 a pound.
You live in Maine, the Kuwait of lobsters.
It's $7 a pound.
Is it $7 a pound? I don't know. Is that like 2x what it used to be?
Oh yeah, it's like highway robbery.
Really?
You know,
even in Maine, it's $7 a pound. I thought you guys just pick them up out of the ocean, just eat them raw.
You guys are probably paying $40.
Yeah, there you go. Mr. Uncle Mike, what are you paying for lobster? And then what are you watching the rest of the week, sir?
Sorry, I had to unmute myself real quick. I really don't pay anything for lobster because I really don't eat lobster all that much. But nonetheless, in terms of what I'm watching this week, we're back in the range on the S&P. So just curious to see where we go with that. Perhaps we will get a big move, as Andrew discussed, and just watching the president's Twitter account. You never know how that's going to affect the market. I do believe that a lot of the trade war things are pretty well priced into the market in general over the longer term. So not too concerned with that, but it can definitely spook the market in the near term. So that is what I'm going to be keeping my eye on.
All right, listeners, that music means, unfortunately, we've come to the end of another epic sojourn from the Southern studio there. Glad to see we got all that, all those fun issues worked out at the top of the show for the audio. We love you guys to let us know that stuff. We love our listeners who are on the ball there saying, why can't we hear you? Let us know. We're busy doing the show. We don't know what's working for you and what's not. But before we go, let's go back around the horn one more time. See what everybody's got cooking. Mr. Rock Lobster, you're hot off the heels of your big Option Pit Pro Extravaganza Palooza. You got, I think you got your Asian options made easy coming up soon. What else is cooking in the land of the pit?
You're going to die. So first, right now, we've got Keith Harwood is one of our mentors. He does a great job writing our breakout bulletin letter. He's doing a 4-part course right now on actually putting, technical analysis stuff together with low vol options for kind of explosive trades. He's got a really nice track record at Option Pit. People love him in there. He's doing a webinar right now, and in August, I'm going to do, just for you, getting your juice for free, how to buy options made easy from Option
finally.
Pit.
It's only been, 5 years in the making, sir?
5 years. I've got the whole thing written. It's really cool. And if you want to learn how to buy options and not pay for them, you will take this webinar. It'll be a 4-part way. It'll be 5 parts. First one's free, like as an intro, and then there's 4 other pieces. All kinds of techniques to teach you how to buy options and not pay for them.
So it's going to be 1/8 ratios and all that kind of good stuff?
1/20. 1/20.
Yes, I was being conservative.
Yes.
There you go. Juice for free, listeners. You've wanted it for many, many years. It is finally. He's a little slow up there in Maine, but he gets around to it eventually. And then you guys can benefit over there. OptionPit.com coming soon. Juice for free, and then someday in the near future, just what the heck is an Asian option by Andrew Giovinazzi. OptionPit.com to learn more. And Mr. Uncle Mike, sir, if we want someone to help hold our hand through these tumultuous, topsy-turvy, macro-heavy markets, where should we go? What should we do, sir?
By all means, come to St. Charles on Thursday night, the 28th, the St. Charles Investing Club. We're going to be talking about spread trading, and the title of the event is Spread Trading for Sophomores. Perhaps you've sold an option in your life, but maybe you've done a spread at some stage, but you want to maybe learn a little bit more about it. Come to the meeting. And even if you've done 10,000 spreads, come to the meeting also. We'll be talking about what's working, what's not working for us as traders. We'd love to have you. 303 East Main Street. You can sign up. Search St. Charles Investing Club at meetup.com.
There you go, meetup.com, St. Charles Investing Club. Even if you're not going to be in the St. Charles area, head on over there. See Uncle Mike. Let him buy you a Euro. Let him talk to you about SKU and maybe going to the dark side of short, premium, and all that other fun stuff. stcharleswealth.com. Check out the Fox. Let them know what you think about it. Click on the Fox if you want to learn more about what Uncle Mike and the crew are doing over there at St. Charles Wealth Management. On behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing. All the other fun stuff that you do, including keeping us on our toes when the chat goes down. And we'll see you back here tomorrow for Vol Views and Twifo. Yes, they will be live this week, so don't worry. You can stop sending me your emails. They will be live this week. And we'll be back for Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.